It's your boy C-Roc on the What Are You Made Of with Mike C-Roc podcast. And we are sponsored by Nations Lending, Home Loans Made Human, doing home loan financing throughout the United States. And I'm so thankful for them for helping us out with our podcast, getting it set up, supporting us. And just want to thank Nations Lending. And today, we have an episode today with a friend of mine. I appeared on his podcast and, had a great time. And so he was telling me a little bit about his story. And I'm like, you know what? You got to get on my podcast and share your story with me. So I have Rocky Lalvani with me. And help me welcome Rocky. I'm going to put in the show notes how to contact Rocky, by the way. But I want you guys to give support to Rocky after hearing his story. He's a great guy. I know his story. But Rocky helps business owners focus on profit to fuel a life of abundance. Rocky Lalvani, MBA, enrolled agent IRS, profit first professional, helps small business owners focus on creating profit first in their business so they can live a life of abundance. His parents immigrated to the United States to start over in their 40s and create the American dream. In spite of a lot of struggles and his mom unfortunately passing away when he was 7 years old, he has been able to achieve financial success. Rocky wants to share the lessons learned along the way so others can achieve a life of abundance even faster. So after achieving financial success, Rocky realized there's so much more to life than money. His focus today is on helping others live their purpose and create their unique balance with their health, wealth, time, relationships, and spirituality. And Rocky, a lot of times when things happen like this to us at a young age, I had some things happen to me as well, and everybody knows the story if they've listened to prior episodes, but it affects you. And a lot of times superstars rise from those things.
That they do. And you never want to lose a parent as a kid. But also looking back, I realized that if that didn't happen, I wouldn't be who I am today. It created a situation amongst other things that occurred around that same time that in a sense gave me courage, stamina, and kind of hardened me to be able to deal with setbacks in life and to just keep going. And I think it's similar to your story in that standpoint. So I talk to a lot of people and I hear their life stories, and the one underlying component in many of their stories is, for many of them, is something that happened in their childhood that created a situation that just gave them a sense of inner strength that they kind of skyrocketed from. So when I came here, it was the late 60s, early 70s, and we lived in an area where, I think you're in New Jersey, right?
Maryland.
Oh, you're Maryland. That's right.
Not too far.
We lived in North Jersey, but if you think about it, this is the time of the race riots and a lot of turmoil in the United States, black versus white. The town we lived in was half and half, and I didn't fit into either camp. People are like, "Are you black or are you white?" I'm like, "I'm Indian. I don't fit into either of those labels." So you get a lot of that, and just trying to figure out the American way, and it was just, we learned a lot. But part of that also, I think, our family foundation was they never talked about their struggles. They just talked about success. And the expectation was that you will succeed. So I think I at least had that kind of a strong base behind me. And I saw that within our community. So it was pretty cool.
Yeah. And so you came from India, and your mom passed away when you were 7. Can you remember back to that and have any like memories of her or going through when she was maybe possibly sick or whatever happened to her? Do you have what kind of memories do you have from that?
So yeah, my parents didn't tell me anything was going on, and she got sick when I was 6, and it was literally a year from when she got diagnosed till when she passed away, and it was pretty close to my birthday too. So I think at that age, you just don't understand what it means. And so I think that was a big part of it, is just not understanding. And it was just struggle, you don't know, and they didn't really talk about it much. And so I think it was me trying to figure my way out. So I spent quite a few years just lost, I'd say.
Right. And then when did you I guess when did you start to realize that you're capable of overcoming obstacles from your past experiences and from the loss of your mom? Do you remember that when that kicked in?
So I think what happened is my dad, I was a single child, and my dad just said, "Hey, this is the cards that I'm dealt, so I'm going to deal with it." And because of that, he learned how to do the wash, so I learned how to do the wash. He learned how to take care of things, so I learned how to take care of things. We just learned to just kind of be. And he learned how to cook so he could throw dinner parties so that people could come over to the house. He just figured out, what do we need to do? And I watched him do that. So I learned how to do all of those skills as well. And then I always had this desire to be wealthy. We had a lot of relatives who very quickly went from having nothing to building up massive wealth. And I always was like, I'm going to be wealthy. I want to be a millionaire. So I just kind of went out and started hustling as a kid, always looking for a buck, figuring out a way to make money. And so I think it was just, I don't know, somewhere in there was just that spirit of just go.
And when was your first job? Do you remember your first job?
My first job would have probably been paperboy, so probably around 12-ish.
Yeah.
And that was really cool. I had I was 7 days a week, and you'd be out at 5:30 in the morning before school delivering papers. What was really cool is back then people would give you feedback. People would say, I want my paper inside the screen door. I want my paper here. When you collect, do this, behave this way. So people were always giving you feedback. And I just listened to their feedback. They're like, don't ride your bicycle across my lawn. Okay. So I did what they told me, and I started getting bigger tips. So here I was, a kid making $50 a week, which today isn't a lot, but when you adjust for inflation, that's probably like a 12 or 13-year-old making $250 a week, pure cash, living large. I mean, from that point, it just kind of went up. I found jobs and I did different things. And then the other thing I used to do is when I was young is that was kind of when all the digital stuff was just coming out. And I would go into New York City and I would buy stuff wholesale and I'd bring it back and I would sell it to my friends. I'd just mark it up for 100% and sell it to my friends. And so I was kind of, a side business, just hustling and making a couple bucks here and there. And I just, all the way through high school and college, I was flush with cash. I always was. I wasn't drinking the cheap beer. I was drinking the good beer.
Now, do you remember how you learned how to mark it up do the wholesale thing, wholesale retail?
You know what? I don't know where I came up with that whole concept of marking it up. I just know that I had whatever I bought it for, I doubled it in price. And I think what happened was I would go get stuff for myself and people would ask me, hey, can you get that for me?
Right.
And so I think I just, somewhere along the way, I just kind of figured out, just double it and go. It was a simple process, right? Just double it and go.
Right. I like that 100% margin. I love that. I did things a little differently. My first job was in sales, and I lived on a golf course at my father's house, and I would go on the golf course and get the golf balls. And I didn't listen to feedback because the owner of the golf course would chase us with his golf cart, and we would keep coming back after he left, and we would gather the golf balls and sell them. And, that margin was pretty good too, because we just had time invested. And so, but
that works.
Yeah. So let's talk about the profit first idea. You mentioned a little bit of this to me when I was on your podcast, explained to me, and it made sense. I always think things this way. In my personal finances, about saving, paying yourself first. It's similar to that, but I'll let you get into the details of that. But you always want to make sure that you're paying the most important person first, right? So you're talking about in a business. So shed some light on that for me.
So you have to pay yourself first. I spent most of my career actually as a W-2 employee. I have real estate background, and I had my real estate license when I was in college. I was selling real estate, but then I never got properly involved. In other words, I wasn't doing my own flips and my own work because I couldn't figure it out exactly. It took me a bit of time to figure out how to do that part of the business. But all that time I paid myself first. And a couple of years ago, I was been doing financial coaching for a while with people, and I learned that business owners were just as bad, if not worse, with their finances as people were. And I was kind of shocked. I was like, wait a minute, you're in business and you don't understand the business of your business and profit. I mean, it started out like as a kid, right? I'm marking everything up. I know I have 100% profit. And I came across a program that Mike Michalowicz did. He wrote a book called Profit First. And rather than change the way we behave, he kind of uses the way we behave and he just changes some systems around it. So you've heard about lifestyle inflation, right? Lifestyle creep.
Right.
The more we make, the more we spend, right?
Despite
Same
us
thing
trying
happens.
not to.
That's what we're trying not to. It's called Parkinson's law, right? And basically what it is the more of something you have, the more you'll utilize. So if I give you 3 weeks to put a deal together, you'll put a deal together in 3 weeks. If I give you 3 hours to get that deal together, you'll get it done in 3 hours. Same thing. If you look at your business accounts, if there's money there, you tend to spend it. And so what we did was he changed the equation. Everyone knows the standard equation is sales minus expenses equals profit, which means profit comes last. If you run a business, at the end of the year, your accountant sends you your K1, and on it he goes, hey, that's how much profit you made. And you look at him and you go, where is that profit? I don't see it in my account. And he kind of laughs at you and says, well, it's just a number. It's not real. It's made up. What he did was change that equation to sales minus profit equals expenses. And so we put profit first. The equation's essentially the same, but it changes the mental framework. And as soon as money comes into your business account, you literally skim off your profit and you put it in a separate account. You take out your pay, you put it in a separate account. You take out your taxes, you put it in a separate account. And then whatever's left, go ahead, spend it, figure it out, do your best with what's left. But this way, you're always guaranteed that your paycheck's there. You're always guaranteed that when business is booming and the accountant calls you, on April 15th and says, you owe $100,000 to the IRS, you've got the check ready to go because the money's been set aside. And
Right.
at the end of the year, that profit's real because it's sitting there in a separate account that you should remove from your business. And that's basically how it works.
So when we started our mortgage business, I've done this twice now. I started two mortgage businesses and grew them into just under $10 million annual revenue companies. The second time was easier, I would say, except for the first part. It seemed a little tougher. But my partners and I took minimum wage, and sucked it up so that the company would have as much money to work with at first so we could get the business up and going faster. And we lived off our savings during that time. But we knew that we had it wasn't like really a start from scratch kind of thing. It was 22 employees in 3 branches, and we had to roll. And the company that we went to work for, Nations, kind of fronted us the money and helped us get started. We went in the hole a little bit, and we just took a small amount of money. So I guess I could have went in the hole deeper by taking profit first because we had necessary expenses from the start. So I don't know how that would have related to our business.
I think, so here's the thing, build the habit, right? So maybe in the beginning, what you do is you start with 1% going into your profit account, which means if you're doing $100,000 in revenue, are you going to miss $1,000? Probably not, right? You can do that, but you're creating the muscle habit. As far as your owner's pay, if you're taking minimum wage, well, then put minimum wage aside for yourself, and keep it there. I think what it does is it gets you to thinking that, hey, I do need to make a profit. And if you're putting money back in the business, you're cognizant, hey, I'm putting money in the business. Then you start making tougher choices. Do I need to buy a new office chair? Is there a way that I could do this that's kind of out of the box that won't cost me money? It just forces you to think a little bit more. Too often business owners are like, oh, it's a tax deduction, I'll spend it. They're spending $1 to save 30 cents, and that's not smart business. Yes, you can do it up front. You start really small, and then over time, you increase that profit percentage. But it's a mindset type of thing.
Yep. Well, we've taken an approach, and I think I spoke to you about this on the podcast. We've taken the approach where we spend 95% of our time on the top line, and that's bringing revenue into the company. And then you know, 5% of the time we're looking at expenses. And of course we started out with a business plan and we have an idea of what we're going to be spending, but the majority of our time is prospecting, bringing revenue into the company. Every single person in our company, whether they're salespeople or not, are focused on revenue generating activities, because if you bring enough revenue in, the rest takes care of itself to a point. And that's why you still need the 5% of the time to look at the expenses and review that. But I'm going to get into that book. I'm going to look into that and read it. And I'm sure I'm applying some of it, the principles of it already, but I'd like to make sure that I wrap my head around that. Going forward.
I think that in your business is probably a little different than some other businesses. The bottom line is the revenue you're generating and bringing in needs to be profitable revenue.
Right.
So as long, and I think in your business, it is profitable, so that it's probably impossible for you to bring in revenue that's money losing, correct? Or
not necessarily. Let's say, you know, sometimes we might have a tolerance cure that we didn't disclose fees properly for whatever reason, and then we have to eat that. We still have to pay a commission to the loan officer and a bonus to the processor, and at the end of the day, there may not be, you know, sometimes we may do loans and lose money, but it happens. But
that's more because a mistake was made, not because you didn't watch the numbers.
Right.
And that's different. There are some, you know, some businesses will be so struggling to bring in extra revenue to help cover costs that they don't even look to make sure that the revenue they're bringing in is profitable. They're chasing the buck, and even if it's unprofitable.
Right.
So that's kind of where we talk about it. And in your industry, it's a lot easier, I think, to know your spread up front. Mm-hmm. In a lot of industries, it's not so easy. So for them, it's exceptionally important that they watch their spread on the sales side to make sure that there is a big enough gap.
Right. So generally, the people that you work with when you're doing financial literacy or working in financial advising them in a business sense, where do you start with them? What's the first thing you look at?
Honestly, the first thing I look at and the first thing I want people to provide me with is a life plan. What do you want out of life? Where are you going? How does this business fit into your life? What are all your buckets? What's important to you? What do you value? And we look at different areas. I let everyone pick their areas, but some of the core is, what are you doing about your health? What are you doing about your relationships, especially with your spouse and your kids? Because why are you making all this money? And if you're ignoring your wife and kids, you know, she's going to take all your money and they're not going to be your kids for much longer. If you give up all of your health for money, you're going to give up all your money to get your health back. So, you know, building those relationships. So a lot of that comes down to time, making sure that you have time for the people in your life. And then what's your give back in life? How are you connecting to the universe? What are you doing? So I give people the space, the time, and the framework to come back to me and tell me, this is how I want to live life. And then once you tell me how you want to live life, well, then it's easy to figure out what steps we need to take and what we need to do in your business. And then we can look at your numbers and make sure that they fit the life that you want to live.
Well, and because I'm on the sales side of things, I'm all sales, man. Push, grind, prospect. So that, what you just said though, is the same exact thing I'd look at when I'm consulting businesses or I'm working with my loan officers is, hey, listen, what is your reason? What's going on in your life? What do you want? How bad do you want it? Are you committed to it? Because a lot of the things that we have to do and sacrifice and grind on, you won't do unless it's very strong, committed into your mind, written down every day, truly believed in. And that's very important. And I'm glad you said that. And, you know, I already knew you knew what you're talking about, but I confirmed it there. So, yeah, so that's awesome. And then what would you get into after that? Like, would you get their business plan and kind of sit down with them and just review their business plan with them, or what would you do next?
Most of the businesses that I work with usually have a lot of that already solidified. What we do more so is focus on the financials. So I interface with their accountant and bookkeeper and themselves. What I find is a lot of times business owners are not looking at their financial statements. They get them from their bookkeeper, they throw them in a pile, they ignore the email. They don't actually look at the numbers. So what I do is I go in and I look at the numbers and I dig through them. I look for certain trends, and then we start having conversations, deep questions. You're spending all this money here. Are you aware of that? Do you know that this is, and then we look at percentages. You're spending all this money. It seems like you're spending a lot over here. Have you actually reviewed that to say, why is my insurance so expensive? Are my different expenses in line with industry averages for what I should be doing? So just a lot of questioning along that, and then also just making sure that the spread is there. And then depending on the business, we're looking at, a lot of businesses have a variety of products. Are certain products bringing in the majority of your profit, not revenue, but profit? Too often, sometimes we go chasing revenue and we're chasing small margin revenue.
Right.
And you might have some large margin revenue, and it's like, well, why don't you just go chase large margin revenue? Because you could get 10x the buck for the time you put into it. So focusing on that. So that's what a lot of it is, conversations. This is not a one-time, two-time things. We spend 6 months a year side by side, just me getting to totally understand you, your business, and then helping you make little tweaks over time that just compound and help you become so much better.
Now, on an individual basis, for a salesperson, for example, what's a couple pieces of advice for a salesperson that's, commission based for finances? Just like, give me a couple principles that they should follow with, finances.
So I think for a salesperson, number one thing, now, are they 100% commission?
Let's say they're 100%. Let's say they're 100% commission.
So if you're 100% commission, my guess is a lot of these people on a roller coaster ride.
That's the wrong thing. And that's what I help people get off of, because, prospecting has got to be done 95 to 100% of the time. And when you're not prospecting 95 to 100% of the time and not replacing your prospects that you sold, that's when the roller coaster comes in. But yeah, let's just say, because that's for the most part, that's what we see with salespeople. So let's call it, a good month, bad month, good month, bad month.
So you've got to make sure that you understand your baseline outgoing expenses. And you have to understand that when you have a good month, do not blow it all, because there's a bad month coming based on your current roller coaster. I think too often salespeople get a big bonus check and they blow it. So
it's not funny, but it's funny because it's true.
It's true. So figure out your baseline expenses and always make sure that you've got your baseline covered. And if you can get your baseline covered for 3 to 6 months so that you can deal with the roller coaster, it's much, much better. And then pay yourself first. Figure out, how much do I want to save? So here's the question you have to ask yourself. How long till I want freedom? How long till I want the freedom to be able to say, I don't have to work anymore if I don't want to. I may choose to work. I don't have to work. I choose to work. But I have the ability then to say yes and no to the clients that I want to work with, right? So if you're a salesperson, you get to say yes and no to the customers you want to work with when you achieve financial freedom. The key to financial freedom is the gap between how much comes in and how much goes out. The more you can save, the faster you can save, and the bigger that you can build up your nest egg, the better off you are. You're in the real estate business, right? So a lot of your guys are in real estate. My suggestion to them is, first step is build up enough money that you can start buying cash flowing properties. If you can buy them cash, all the better, right? Because now if you've got 10 cash flowing properties and that 10 cash flowing properties is paying for your life, everything else is free and clear, right? You get to choose how you want to live your life. Do what you want. Yes and no to anything you want in life.
So yeah, I mean that and it's taxed differently too. Passive income's taxed differently. You pay less tax on that, which makes a difference. You get depreciation, right?
You get depreciation. So most of those properties you're barely paying any taxes on.
So I'm working towards that myself personally. I had some rental properties, but what I did now is I got my wife licensed in real estate. And so now what I try to do is have her sell enough real estate to take care of our overhead. And then what I do in my business then we can, get some cash flowing properties. So if you have someone if you're a listener and there's 2 people in the household and your wife or husband's staying home right now with the kids, and once those kids get to a certain age where there's some time freed up, check something like that out. Check a situation where you can get into sales, whether it's real estate or something else. It doesn't require you to be sitting in an office or retail center, and just a couple paychecks here or there, or commission checks here or there, and put that money in the bank. Now you can either build it up to pay your lifestyle with it, or you could put it in a bank. And for right now, for example, for me, all my wife's checks, commission checks, go right into the bank. We pretend that it doesn't even happen. And we kind of have fun with the real estate. I help her because I was a real estate licensed real estate agent before. Now I'm in the mortgage business. So I know both sides of it. I help her out, and I helped get her feet under her with it. And she did very well. And now we're just having fun with it. We get to spend time together. So yeah, that's a good thing. One thing about salespeople though, if somebody has a commission check of $10,000 gross, they get in their mind that they're making $120,000 a year, right? And in all actuality, even if they did $10,000 consistently every month, they're really not making $120,000 a year, right? So Rocky, how does that work?
Expenses. Well, you've got expenses that cover that, right? Because most of these guys are probably, you have all your expenses that have to come out of that. So make sure that you've got that covered. And then just the bottom line is to pay yourself and hide the money from yourself, just like profit first, right?
Yep.
Skim it off the top, let it go somewhere automatically, and don't touch it.
And we have to remember that Uncle Sam gets his share.
Mm-hmm.
That's the biggest expense that everyone has, right? Is the IRS. So 30 to 40% of the income right off the bat, you're not making $10,000. Right off the bat, besides even getting to your expenses, you're already at $6,500, give or take. So people can't spend like they're making $10,000. Besides even their expenses, you still got to take into consideration Uncle Sam. And you know about that, right?
So there are most of your people are 1099 then?
Not in the mortgage industry. You're not allowed to be.
Not in the mortgage. Okay.
Real estate agents are though.
So their commissions are taxes being taken out as they make them?
Yeah, they are, but you can claim allowances and I think you can even go to 99 and very little taxes will be taken out. So some do that, but then they're supposed to be put in a bank account, of course, pay the tax.
Correct. And if you don't take out enough, then you owe penalties to the IRS at the end of the year. So you've got to manage that and figure it out. I just wasn't sure if they had to save for their taxes themselves.
The real estate agents do.
The real estate agents do.
Mm-hmm.
So if you're a real estate agent, you need to pay your quarterlies, put money aside so that it's always there to pay the quarterlies so that you're not struggling on that last day when you've got to come up with a massive check and you're freaking out.
Yeah, I used to put about 35% away when I was a real estate agent. I would just take 35%, cut it right off the top, put it in an account, and then I would take a chunk of that, what was left, and put it in an account, and then pay my bills with the rest. And that seemed to work pretty good. And I never owed taxes at the end of the year above and beyond what I put away. Matter of fact, I usually put away too much, which is a good problem.
It's a good problem.
So, and one last thing, let's get into one other thing. We're getting ready to be towards the end of the year here, starting 2020. And with that being said, that's a little play on words with 2020 vision. What would you say? I wrote a blog this week about 2020 and finding your blind spots. And I did 4 steps to finding your blind spots. And those 4 steps were, first of all, and I just want to get your take on this. First of all, finding a quiet spot and setting aside uninterrupted time. It shouldn't take more than a couple hours. And put your thoughts together of what you said. You actually, when you referred to this already, spiritual, relationship, family, finances. Find out, I'm going to get these steps here. So you're setting aside the uninterrupted time to do this, and you want to break it down into 4 parts: spiritual and mental, physical, which is diet and exercise, financial and professional, and then relationships, right? And so break those down. That's step 2. Step 3, I put for each section, write down the good, the bad, and the ugly. And be brutally honest with yourself, because you can't fix anything if you're lying. If you're lying to others and you're lying to yourself, you're not going to ever accomplish anything or improve. And number 4, now's the time to figure out a plan of attack based on the good, the bad, and the ugly. And I always talk about writing down your commitment statement. So, for example, I put something like, I acknowledge that I am weak in this particular area. I'm committed to doing whatever it takes to improve and be great in this area. And then you can write some details of that. But you write that commitment down. And for some reason, when you write a commitment down and you decide and commit, magic happens. I don't understand exactly why, but all your thoughts, your visions, your emotions, your words, actions, all go towards that commitment. And the other thing that happens, Rocky, which is magical to me, is that people that are going against you and saying things against you and not believing in you, all of a sudden they start to run or disappear, or they jump on your side. And it's a magical thing. But I wrote a blog about this, and I just want to get your take on that.
So yeah, my theme for next year and what I'm talking with my listeners about is Vision 2020 clarity. So be clear on what you want in life. And that's basically what you're saying. Take time. And I think a lot of people are so busy running, they don't take time to do that. We do a year-end shutdown. So I blocked out my calendar for the last 2 weeks of this year. No appointments, no nothing, just downtime, just to kind of recharge and refresh. When you write down and you become clear on what you want, your subconscious mind takes that in, and that's what it's working on constantly, right? Yep. If you put a negative thought into your subconscious mind, it's going to always be negative to you. You put a positive forward thinking into your subconscious mind, and it's going to go to work on that. That's what your mind does. By telling the world what you want, people are, like you said, they're either going to join you or get away from you, because either they're with you or they're out, and that's perfectly fine. So it creates that clarity, and when you tell the universe what you want, it can provide what you need.
The other thing was when people hate on you or joke, or I get a lot of this. When I started this podcast and I started the What Are You Made Of movement, and by the way, it happens to the closest to you. The people that are closest to you are the ones that start doing this. And I think it says something about themselves and how they feel about themselves, right? But when they start to throw little digs, hey, why don't you go do your podcast? Why don't you say some motivational stuff to me? They'll throw little digs. It's so funny how it does. But a lot of people will step away from what their dreams are because of that, and they're worried about what those people think. I lean into it harder. When I hear that, I want to shut them up, because by doing it harder, and every time I do it, they either shut up or they jump on board. And I would challenge everyone to do that. Don't run from your dreams or your commitments because some clown makes a comment to you or throws a dig your way or jokes or laughs. It doesn't matter. Just show them what you're made of, man.
Is that the best you can do, right? That's what you say to them. Is that the best you got?
Exactly.
Is that all you're going to bring to the table?
So, Rocky, I really enjoyed talking to you both times, your podcast and mine. How are my listeners going to get in touch with you if they have any questions or they want to follow you or engage further with you?
So for the Profit First side, it's profitcomesfirst.com. Profitcomesfirst.com is where you can find all of that. If you want to engage with me on the life side and building the life of your dreams, the podcast and the podcast site is Richer Soul, RICHERSOUL. And on both of those sites, there's contact information where you can email me and tons of information about where I'm at. And it's easy to contact me through either of those places.
Awesome. And I want to give a shout out to Interview Valet. That's how we got in touch. Interview Valet is a great organization that gets people on podcasts. And that's how we got connected, man. And I'm glad that they did that. And I heard about them actually through Pete Vargas. I don't know if you ever heard of Pete Vargas.
I have seen Pete Vargas talk. He was at my mastermind group. He did a real special lecture just for us that was different than what he normally does. And I know Tom Schwab, who's Interview Valet. And Tom actually had started Interview Valet with Aaron Walker, who's part of he's my mastermind guy. So yeah, I'm connected to all of these different people, and I get tons of great guests from that.
That's awesome. Well, shout out to Tom, Interview Valet, Pete Vargas, Advance Your Reach. Very thankful for them. I heard Pete talk at the 10X Growth Conference, changed my life. And I'm so very thankful for him, because anybody that does that for me, I'll run through a brick wall, like behind you and like behind me for them. So Rocky, thank you very much for joining me. I look forward to connecting with you further in the future. And you guys have been listening to the What Are You Made Of podcast with Mike C-Roc, challenging people to share their stories of their past to inspire them to get through hurdles, roadblocks, tough times, or if things are going great, awesome. Take yourself to the next level. Join the private Facebook group, What Are You Made Of with Mike C-Roc. And I'll let you in there, and I look forward to hearing your stories. Thank you for being a part of the What Are You Made Of podcast. So that you don't miss future episodes, please rate and subscribe to the What Are You Made Of podcast on your favorite listening or viewing apps, and follow me on your favorite social media platforms. I would love to hear your stories of past experiences and engage with you further.